The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Strips Finance raising $8.5 million to launch a new derivatives platform in November that will initially enable interest rate swaps through automated market makers, the decentralized exchanges over which much of DeFi is transacted. Joining us now is Strips Finance CEO Ming Wu. Good morning, Ming. So is there a lot of demand for this interest rate swaps that are based in DeFi? Tell me a bit about this market and why you want to convert this into the DeFi world.
Yeah, definitely. I think that in traditional finance, we know rates are probably the biggest market in traditional finance. And so far, we haven't seen a similar adoption for interest rates in DeFi. And so the idea for Strips really came about out of our own frustration with the lack of threat. We could use hedge and trade interest rates from different DeFi and also different lending protocols. So the origination of the idea came from our own use case of using DeFi protocols. And so the users initially will be the DeFi, and we believe that there will be an initial demand for this from the DeFi native users, but really the use case is much broader than that.
I mean, what are you using what kind of interest rates are you looking at? Are you doing swaps to get fixed versus floating? Are you doing are you using some sort of reference rate? What are you using for a reference rate? Is it from the traditional markets, or is it solely from DeFi? Is it U.S. rates versus foreign rates, et cetera? What exactly are we swapping here?
Yeah, that's a great question. So the beauty of Strips is that we can price any based on a price feed, and as long as there's a reference price that we build an oracle for, users can trade anything from DeFi lending borrowing rates, yield farm, yield rewards rates, and centralized exchange funding rates, or even they could trade the Fed funds rate if they wanted to. So the beauty of using derivatives is that you can build a market and using a price feed, and this creates a way for traders and for speculators.
So has it launched yet? And if so, where's all the volume been, or any indication of what's the more popular?
So we plan on launching in November. And so we did a test net in August with a limited number of users, and we created traction and feedback from our initial community. And so the mainnet will be targeted to deploy on Arbitrage in November, and we're also looking at BSC as an alternative chain for the deployment for Strips as well.
Another question I want to ask you, I understand you're launching on the Arbitrage blockchain. Maybe explain your reasoning behind that. Also, there are a lot of competing products to Strips that already exist, such as on Barnbridge and Pendle, but it's been hard to get DeFi natives to switch over to platforms. So how do you suppose to acquire users?
Yeah, so we decided to go on Arbitrage because our technical team looked at the security scales across the various chains and also layer 2 technologies, and we felt like Arbitrage trade-off between security, speed, and transaction cost. And not to say that we are going to be solely focused on. I feel like the future of DeFi is really going to be multi-chain, and so we've been looking at the chains as well, internally, and assessing which ones would be good to launch on. And the competitors that you mentioned, I think that what they've done is great, and we've taken a very different approach to the problem of trading. And so I think they cater to a very specific use case and a niche market, whereas derivatives, you can do a lot more perhaps those protocols are not able to do. So a very easy example is using derivatives on interest rate swaps. You can actually go 10x on a specific interest rate, and you can go net short not only can you speculate on the upside, you can also speculate on the downside.
So, what does this understand about perpetual bonds that you guys are looking to do? It's something from yesteryear in many ways, but do you think that's the future of what we're going to see in DeFi?
I think that bonds in DeFi have kind of been a misnomer in terms of being a traditional, from a traditional financial bond, which is fixed yield and it's a fixed income product. A lot of the bonds in DeFi actually provide variable yields. With interest rate swaps, what we're able to do is actually package a structured product where you have a lending leg plus a interest rate swap leg, which combine together form a fixed coupon bond in perpetuity, which we're coining the perpetual bond.
Got it.
Ming, finally, just before we wrap up, regulating DeFi has been on the minds of the SEC, at least in the United States. SEC Chair Gary Gensler unconvinced that decentralized platforms are completely decentralized. So I'm wondering, how do you hope to navigate regulatory waters globally?
Yeah, that's a difficult and evolving question, I feel. And, as regulators get to grips with DeFi operates and the decentralized nature of these DeFi apps, we are working closely with regulatory advisors and getting legal counsel from our lawyers on how to best navigate the landscape. And as you know, things can change very rapidly in the case of China. So we need to stay compliant, but that's not at the that's not saying that we should stop innovating, because DeFi has a lot of innovative technologies, and regulators should not try to kill that innovation prematurely.
Yeah, I guess, like, for example, can a decentralized platform really have a CEO?
That's a great question. Yeah, so I would say that CEO is a very traditional term. I wouldn't really say that the decentralized protocol has a CEO. We have a team that I think contributes equally to the success of the protocol and success of strips. And so we want to have a decentralized governance for strips where we give the ownership to the users, and that way we can have a truly decentralized for strips.